Hey, this is Justin with DayTradeTheMarkets.com on January 3rd, and in tonight's video I wanted to look at numerous markets and really focus in on what the market did after the FOMC notes today around 2 o'clock Eastern Time. The markets, generally speaking, the majority of them were a little bit choppy and slow today ahead of the notes, but I wanted to really simplify the charts down to just showing the level 3, or our first basic building block of what we look at, the level 3 extreme aggression bars, and how those right after our news events, especially those level 3 bars, can really help us get a directional advantage or a competitive advantage on looking at the market, so we can stay on the right side of the market, stay out of trouble, and that sort of thing. So to give a little bit of context first, we really look at various pieces of market evidence, and our software in real time is giving us various pieces of evidence. But today I'm just going, and the idea here is that you take all of these pieces which give you good information in isolation, when you can put them in context and look beyond just one of the pieces of evidence and look to see when several of these come together, you have a high edge. Now with that said, these relative aggression bars are kind of our first building block, the most powerful way of making sense of the market in real time. And so what I want to do is just focus on these relative aggression bars in this video, and to add a little bit more context, in fact, let me give a little bit more information on specifically relative aggression bars. The idea of relative aggression bars, and these are looking at order flow, they're looking under the surface of the market, if you will, is that the market only moves when one side, either buyers or sellers, is more aggressive than the other. You may have heard people or the pundits on the news say, well, there were more buyers than sellers in the market today, or there were more sellers than buyers in the market today. And that's obviously not true if you think about it, because for every contract bought, there's a contract sold by definition. The way the market moves one way or the other is when one side is more aggressive. Okay, and that's what this software is really getting to the heart of. It's going to tell you in real time which side is more dominant at a given moment, and then not only that, but it's helping you make sense in a relative. It's helping you make sense in a relative sense. To what degree that domination is. Is it moderate? That would be a level 1 bar. Is it strong? That would be a level 2 bar. Or is it extreme? And that would be a level 3 bar. And again, these relative aggression bars kind of act as what we call a roadmap for what the likely short-term direction of the market's going to be. So what I want to do is show several markets today and take off everything on the chart except for these level 3 aggression bars. Okay? And these don't happen too often, but they certainly are giving us good information when they do. So again, no support resistance zones, no filter, no deceleration indicators, no high velocity moves. I'm just looking at aggression bars, and I'm not looking at level 1 or level 2. I'm just looking at level 3 bars here. Okay, so the chart's going to look a little naked, but that's the point. Just to let's break it down to its first component. Let's see what that's telling us. Okay. Okay, so here is the Nasdaq, and this is a 1-minute chart. The same would apply on any time frame that you're looking at. And again, the FOMC notes came out around 2 o'clock Eastern, and you can see the market was pretty choppy, and then we had this level 3 selling aggression bar. And so we want to ask ourselves, number one, on a selling bar, does the high hold? And you can see we tested within a tick of it about a minute later. And then can we get follow through lower? And that's what happened. When that's the case, when you have a level 3 selling aggression bar, as long as it doesn't get rejected right away, the high is not taken out right away, it's a pretty good sign this market wants to continue lower. Now you can see this bar here, this level 3 bar, it basically did get rejected. Okay, so that doesn't mean there's no buying evidence that's come in. It doesn't mean that buyers have taken over, but it just means this pure wave of selling has at least come to an end, and now we want to see what happens one way or the other. Can it break one way or the other? Okay, and you can see that later on we have another selling aggression bar and so forth. That's the Nasdaq, but the key I want to look at is just right around the news here. Here's that first one. What's it telling us? That's giving us a pretty good indication of which way the market's going to go. So there's the Nasdaq. Let's look at the Russell. Obviously, it's an index market, so it's gonna be similar. This one actually gives us a little bit of a heads up right before the 2 o'clock hour, where you can see again we got this level 3 selling bar, and we want to ask ourselves, can the high hold on a selling bar, and then can the low get taken out, which is what happened. We actually had a little bit of a heads up at about 153 or so, this is a 1-minute chart, but about 153 or so, we had this level 3 buying bar on the high of the day. And so we want to ask ourselves, can the low of this bar hold? And it did. It popped a little bit. And then can we take out that high? You can see that didn't happen. And instead, we got rejection just ahead of this news. So when we get rejection of a level 3 bar on the high of the day, or rejection of a level 3 bar on the low of the day, for example, it's a pretty good indication that the market wants to move in the opposite direction. And so again, you can see right when the news came out, level 3 bar with continuation. Here's another level 3 bar. Then we had this level 3 buying bar within, kind of an inside bar on this level 3 selling bar. So it's kind of a battle within a battle, if you will. So here's our bigger battle, and then here's our smaller battle, and we want to kind of see who wins that. And you can see that battle was won by sellers, so the expectation would be for the market to continue lower. And again, here's another bar where we didn't have follow-through of this one. We had some rejection, but again, there's no buying evidence that's come in like we had when we had rejection off of this one. We then had buying evidence come in at the end of the day. So this is telling us this pure wave of selling is over. It's not telling us buyers have taken over, but that the pure wave of selling is over when this bar here was rejected. Okay? Same thing here. This level 3 comes in. Can the high hold? It does. This level 3 bar comes in. Can the high hold? No, it didn't. And not only that, but then we had some buying evidence come in. So toward the end of the day, you can see we shot up a little bit higher on the Russell. Okay. Here is the euro. Okay. Again, a 1-minute chart would apply to any time frame. You can see on this chart around 11 o'clock Eastern, we had a level 3 bar with some follow through. So the market did trade a bit higher for a while. And then we got pretty choppy with the rest of the markets ahead of the news. And then at the news, right around 2 o'clock Eastern, we had this level 3 selling aggression bar. So again, same question. Is there follow through or is there rejection? You can see there's follow through. Same thing happens here. Another wave of here's 2 in a row. Just as an aside, when we get 2 of these in a row, right in a row, what we like to look at, this is what we call our sweet spot trade idea. You see where these 2 bars overlap right here? Well, that's a pretty good trade location for getting short in this case, kind of what we call, again, the sweet spot. But again, the point I'm trying to make more so is simply that right after the news, level 3 selling aggression bar telling us extreme selling aggressions coming into the market with follow through. This market wants to head lower and most likely. Okay, let's look next at the here's the bonds. Okay, here's the bonds right around the news. Level 3 selling aggression bar once again. Can the high hold? Yeah, it tested within a tick of it. 1 bar later, low is taken out. You can see market wants to head lower. Next, crude oil. Here is at the news. Well, you could see earlier in the day around 11:15 as well, we had this level 3 buying aggression bar, and so we want to ask ourselves, which side's going to win. And you can see the market did consolidate within there for a bit. The low was taken out pretty quickly. The high was then tested by a tick. Low was taken out again. So it's leaning down at that point, and then even the crude oil was affected by the news, the FOMC, and you can see we sold off here ahead of the close. Let's look at what else we have here. Let's look at the ES, kind of the main market we look at. Again, you can see right at the 2 o'clock Eastern news, level 3 selling aggression bar. Can the high hold? Didn't get tested. Can the low get taken out? It did. Another bar comes in. Can its high hold? It gets obviously tested the next bar and holds. Another one comes in. Can the high hold? Yes. Another one comes in. Here's another one. The high holds. Yes. Now here's a level 3 buying aggression bar. It got a little wild toward the end of the day, obviously, but you can see that's telling us that this wave of selling has at least come to an end. We have a little bit of a buying wave here, then selling comes in, then buying. You can see that it got a little bit hectic there, but that's the idea. And I mean, you can roll this back. You can see yesterday we had that late day rally. What did it begin on? Well, actually a little bit earlier here. Let me make this, see if you can see this a little bit better. Right around 3 o'clock Eastern. What did it begin with? Level 3 buying aggression bar. Quick follow through. Low didn't get tested even. Here's another one. Here's another one. Okay? Here's that sweet spot idea again. Here's 2 in a row where they overlap right here. Okay, now that's late in the day. I don't necessarily advocate taking trades that late in the day, but the evidence is telling you buyers have come in. So again, point was just to show this idea of what these aggression bars are telling us, how they give us a bit of a roadmap, especially these level 3 buying aggression bars. So again, I just showed the chart with only level 3s, nothing else, none of the other evidence like the none of the high velocity moves, none of the support resistance zones, none of the decelerations or divergences, no filter, didn't even talk about bigger picture bias. So all those pieces of evidence come in to help you make you a better decision maker, but kind of the first thing we talk about are these relative aggression bars. And within those relative aggression bars, the first thing we want to talk about are the level 3 aggression bars. Hopefully that made sense. Also, if you're still with me, thank you for hanging in there. If you want, I have another video available on a little bit more depth about what aggression bars are and the idea behind them. If you're interested in that topic, just send me an email, info@DayTradeTheMarkets.com, and I can certainly send you that video. All right. Talk to you soon. Have a good day. Have a good Friday tomorrow. Take care.